Hello and welcome to today's webinar. Thank you very much for joining us today. The webinar today is hosted by Visa, moderated by Finextra Research. My name is Gary Wright. I'm the head of research at Finextra, and along with the panel who I will introduce you to in a few minutes' time, here we are ready to talk about today's topic, which is embedded finance, valuable partnerships and opportunities for payments. And the term embedded finance is not new, but maybe it's a fresh way of looking at it, defining it, and deploying it more in a partnership environment. And so the format for today is firstly to invite you to please contribute to the discussion through the link that we have provided. Please pass any comments, ask any questions, make any remarks as we go through the session, and we'll try and build those into the conversation that we're going to have. And it is very much a conversation. What we're here to do is to share views and opinions from different organizations and different individuals within those organizations who are wrestling with this issue of embedded finance, building relationships, trying to commercialize what we're doing here in a very competitive world. There are a couple of poll questions which I will ask you to contribute to, and again, we'll share the results of that. But as I say, very, very good of you to join in, ask questions, and make remarks. The format is I'll ask, after introducing them, each of the speakers to give us some contextual background, a couple of minutes of each of them, just setting the scene for a more detailed discussion that we'll have once we've gone through the opening remarks. And what are we really talking about today? Well, look, embedded finance has been part of relationships between institutions in the world of finance, moving money for a long, long time. But like many of these phrases, they get refreshed. They take on a new meaning, particularly in today's world. And so when you think about embedded finance, you don't just think about one organization, you think how they come together to create value in partnerships and opportunities to progress the range of services they offer to their clients. And what are some of those opportunities to work together? What are some of the benefits? What are some of the milestones? And what are some of the practical issues we also have to take into consideration when we're doing that? How do the FinTechs and the banks and various players come together in this world of perhaps partnering more strategically and commercially than we have done in the past? So there's lots to talk about. And how do we come together to make this a mutually beneficial solution under the banner of embedded finance? And to do this, let me introduce our speakers. Firstly, let me welcome Alessandro Figueroa, who is the head of strategy and B2B partnerships at Visa Commercial Solutions. Then we have Ranjit Jalipatpelli, head of product UKI at Stripe. And then we have Suki Atwal, who's the head non-bank financial institutions at Clearbank. So we've got quite a spread of people representing institutions that are very much at the heart of what we're talking about today. So let me go into that first round of sharing some insights and thoughts before we go into a deeper dive on the topic. So let me turn to you first, Alessandro, for your thoughts and opening remarks.
Thanks, Gary, and thanks everyone for having me today in the webinar to discuss such an exciting topic. For those in the audience, as Gary rightly said, I'm Alessandro Figueroa. I head strategy and B2B partnerships for Visa in Europe. And the potential for embedded finance is enormous, and the reality of our industry is the payments are starting to become embedded, right? And that's a reality we need to live in with. At Visa, we have been at the forefront of driving this development together with our clients and partners and bringing opportunities and benefits for the whole ecosystems, whether it is banks, enablers, technology integrators, SaaS players, non-FIs, but also consumers and businesses. Our team, specifically my team, helps to accelerate innovation in the ecosystem, but also take the best of the ecosystem to our clients to consume. As part of this and our strategy, we aim to expand and democratize payment capabilities to new verticals or emerging segments, so these industries can actually serve their customers better. And we actually see embedded finance as a key enabler to develop this. So really, really excited to talk more about this topic.
Thanks very much. And clearly you touched on a very important part here. It's a partnership around a range of services and values to a whole variety of institutions within the ecosystem, the banks, the enablers, the fintechs, and more. So we'll certainly pick up on that as we go through the webinar. Thanks for those opening remarks. So Ranjit, let me turn to you for some thoughts from your perspective.
Thank you, Gary, and thanks everyone for having me. So I'm Ranjit Baljapalli. I lead product for Stripe in UK and Ireland. Stripe, for context, is a provider of payments and financial infrastructure to enable businesses of all sizes, from the startup that was started probably yesterday to the very largest of the large global enterprises in the world, to accept payments, offer embedded financial products and solutions, and also to manage revenue and reporting automation via easy-to-use software products and API solutions. We process for millions of businesses across the world, and I'm happy to touch on more of the business and a merchant perspective in this conversation. And a lot of those businesses we see also are increasingly embedding value-added services by virtue of embedded finance or banking as a service enablement within their own existing ecosystem. So this could be issuing of corporate cards for employees, or marketplace participants like drivers or couriers and so on. Or it spans to like working day capital and lending solutions that Stripe also offers for SMBs and so on. The underlying theme of all of these in the industry has mostly been around, historically they've been offered by a bank or they've been offered by a fintech. What we're seeing increasingly is that there's a coalescing of those two ends of that spectrum in offering joint partner-led solutions, particularly when there are regulatory constraints or really some key use cases in the industry that require more than just being a fintech or more than just being a bank. I think that synergy is something I would really love to suss out a little bit in this discussion as well, and definitely looking forward to the chat.
Thanks very much for that. I think it's very interesting, and we should perhaps at some point just agree with some definitions on embedded finance as was and now, because I think it's important to set the speed around it. Because it can be interpreted quite rightly in a number of different ways. So again, points to come back to, and clearly some opportunities to draw up maybe some examples of how and why these relationships have formed over time, and what does it bring for the future to both of the organizations. So thank you for that. And Suki, let's hear from you, please.
Thank you, Gary, and thank you for having me on this panel. So ClearBank, we started business in 2016, and we really started with a question: is there a better way for UK banking to evolve to? And we started off as a cloud-native, API-first organization with a banking license. And embedded banking, as we term it, because we call it embedded banking because we are a bank, so we offer our customers to partner with us to offer banking services to their customers. So it's not bank-like services. There are actually bank services. So we started off with that question, which, curiously said, okay, what if a fintech wanted to offer banking services? They don't want to become a bank themselves, but they want to partner with a bank such as ClearBank. And I'm pleased we're beyond the theoreticals here at ClearBank. We have a number of platforms out there in the market we're supporting today that are disrupting their own segments in their own right. And it's one of, I think the themes have come across, is one of kind of co-create, partnership, which is why we arrived at the point we are today. And we've got some very, very exciting dialogue going on with new platforms as well, helping them disrupt their own segment by embedding banking services into their platforms. ClearBank, we're a direct clearer in all the UK clearing segments, so we're not reliant on a third party to provide banking services to our customers, which is really important.
So that raises some more points, and again, we'll come back to Suki, because, as I said, there's different models, and then how you perhaps find each other in terms of the relationships that you develop, and what are some of the challenges around that, some of the benefits and some of the considerations, maybe even risks. Always interested when there's partnerships as to where risk and liability shifts in the overall chain of the provision of the services, and some more things to come back to. And again, good to hear any examples of the business cases that you can share with us. So everybody, that brings us to the end of the opening remarks. Give you some contextual background to some of the points that you know we're going to discuss during the session, and then we'll move on to that debate. And please do share your thoughts and comments with us. But I did also say at the start that we've got a couple of poll questions for you, and through the link that we've provided, which you can now see, be really interested to hear your thoughts on the question, which is, where is your organization on its embedded finance journey? A, not offering embedded finance yet. B, actively searching for the right partnership. B, you've begun implementing it. Or D, you're already offering embedded finance. And again, I think this comes back to a little bit more of a discussion around description first. So, Alexandro, let me come back to you, because I think it's always good to step back a little bit. And we've talked about, the emergence of embedded finance, but let's go back, and maybe it's worthwhile to ask you to just give us a view of how embedded finance, which, as I say, has been around for some time, is now being an evolving solution and an adopted one in the marketplace. So how is that coming about? What's the journey that you've seen in more recent times that raises the profile of what we now call embedded finance? Alexandro.
Sure, Gary. Look, let me step back, as you said, and probably just think around how the concept has actually emerged, right? As you rightly said, embedded finance is not a new concept, but rather one that has become resurrected, let's say, due to advancing technology. So if we actually go back to where it started, I think, and the team has done a lot of research here at Visa around this, and we have talked to different advisors. And actually, it's funny, and ironically, the early versions of embedded finance really appear in the Old West, when merchants keeping a tab open for customers and, for drinks. Essentially, customers at that point in time, employees, were paid once a week or once every 2 weeks. And actually, the merchants, in this case, the pubs, were providing credit to these people to come and drink to their saloons or pubs, which I found this a funny way of thinking that, right? So non-financial institutions actually providing credit to these customers. But then, look, if we think around the 80s, you had merchant co-brands or white label cards actually that were started to combine with loyalty programs. That was very successful, right? Then we went into the 2000s, and obviously we had the rise of e-commerce and first integrated payments in e-commerce. So all that were early versions of embedded finance, if you like. And then, look, in 2010, I think we like to call these the enablers. And look, you had the birth of the software as a service platforms and the SaaS model per se, the emergence of open banking and APIs, and then bank as a service starting to enable traditional banking service on behalf of other companies. All of those were really like the enablers, were really the tipping point and driving to what we are seeing today. And then, I like to call right now in 2020, we are in the growth phase, or in that proliferation, which is essentially greater adoption of use cases across industries, player types, expanding into this trend. I like to think we are, while we are in the tipping point of this, we are only at the beginning of the journey. There's lots of potential of embedded payments, and as I said before, I think embedded payments is just going to be the new reality of payments. Obviously, as you go on into these new use cases or industries, I think there's an array of of different scenarios that can actually play out. But just to give you, I mean, I actually came prepared with a few stats, which I think is really interesting for everyone to see how embedded finance is fastly becoming very attractive space for everyone. So I think it has been forecasted a total valuation of 7 trillion market cap for embedded finance by 2030, right? Which is a massive number. Venture capital funds have actually invested 6.7 billion in terms of finance in EU and North America only in 2021. So this is more than double what they actually invested in the previous year. It's a substantial amount of their actual total investment capital fund. Many SaaS players are actually making more than 50% of their revenue out of payments, which is really interesting as well. And then if you take at markets like the US, for example, it is estimated that embedded finance actually accounts for 5% of all transactions today, which again, it just tells you about the breadth of what's happening, but also like what opportunity lies in the future. And then just two final stats, which I think is really, they are really important. So 92% of the FIs want to get involved in embedded finance. And actually 73% of non-FIs actually are planning to launch embedded finance within the next 2 years in Europe. So all these stats give you a sense of the breadth, the potential, the attractiveness of embedded finance, but also like what we are seeing is just the beginning of the journey. Now, if we actually turn to use cases, look, the typical, I think, let's start with payments first, right? So in payments, you have pay-ins and payouts. I think pay-ins have proliferated really well with many merchants accepting payments via SaaS platforms and SaaS providers, which is, again, a very profitable business for them. I think initially this came really well with restaurants, hospitality, retail, but actually the opportunities emerging in different new segments, especially where there's a lot of digitization, a lot of change, a lot of venture capital funding. Those industries are really ripe for embedded finance. Payouts as such, obviously, as you're building an ecosystem, are lagging a little bit behind, but they are reaching an inflection point as well with full potential, yet still to be actually achieved in most verticals. I think there's great opportunity in what we call the ecosystem platforms. Those two side demand and supply side platforms, I think they are really well set to thrive in this ecosystem. And then obviously you have an array of different use cases beyond payments, right? That's lending, investments, insurance, banking, etc. I think all providing much better customer service.
What I'd like to do is, if I may, can I just pause there? Because I do think it's very important to go back into these business cases in a bit more detail. And I think between us, we've got some really good examples of how we've approached embedded finance from this more modern definition and indeed acceptance of partnerships and opportunities that each brings. So I think that's really, the stats are simply overwhelming and confirm the opportunities that we have in this area. And maybe I could just pick up on the story that you gave us there, and I feel like the Wild West analogy, non-banks offering credit lines, that's very interesting. I wonder what the default rates were at those times. But if we bring it up to speed, and I come to you, Suki, without going into the business cases, picking up on the comments there about the evolution, when you said at the very beginning, when in 2016, when ClearBank came together, you seem to have very much an embedded finance principle at the core. Is that fair?
Very much so. And I think the thing about statistics and data points are there's the market, and totally accept what Alexandro is saying about the flood of money coming into embedded finance through venture capitals, because they all want to get prepared for the growth, which is brilliant to see, not knocking that at all. But at the same time, if you have a look at the customer data points, and this is public domain information, so I'm happy to share this with you. So since Clearbank went live with Tide, the SME bank provider, they've got over 280,000 member accounts. They have over 10% of the SME banking market in the UK, and they've achieved that without becoming a bank themselves. So to the concept of co-create partnership, it's all about Tide being really, really passionate about the front end app, serving the SME through their app, the services they really want. And want of a better expression, Clearbank being in the back end and all the pipes and the payments and the account services, all those banking services that they don't want to create themselves, that they're happy to partner with a Clearbank. And it's about, the financial economics as well, Gary, as you said. These models have to stack up and they have to be sustainable. But that's just one example that, I can use that's live, very successful. And similar, we're supporting other platforms such as Chip. They have over 500,000 users and have really disrupted the savings market in the UK. Wealthify, Raisin, I can go on. All these platforms that are really using those banking services and embedded them into their front end to disrupt their space. And we're very pleased that we're a small part of those successes.
And I'll come back to that because, again, there's a model whereby it's your banking license that is at the core of some of these services. But I do like the idea of just completing the circle here with Ranjit, a view from you, because, again, if we go through the evolution of where we are today with embedded finance, you've, again, taken a stance on it which will differ from others. So it's probably worth sharing how you've looked at the opportunities under embedded finance.
Yeah, certainly. So I think it might be helpful to sort of underpin what we are doing to what our users or merchants are asking us. So if you play the clock back maybe a decade ago, it was more about digitization and just being able to easily accept payments online through multiple channels, moving away from maybe physical stores or the new advent of the app ecosystems and marketplaces. That was the crux of it. I think we've eventually, at least in this part of the world, reached to a point where that has come to some sort of level of maturity, where those businesses are now well established on public markets and are trading at quite a healthy multiple. Now they've started to pivot their attention from what else they've built up this entire ecosystem, particularly with like SaaS platforms and e-commerce marketplaces where they have sellers and buyers and customers, and a good way of managing all of the financing and the payment and money movement between them. Now they're starting to think about how do we sort of monetize further or add more value to our existing ecosystem. And that's where we are seeing not necessarily the emergence, but more the enthusiasm behind offering value-added services via embedded finance. So these are things like issuing cards, offering working day capital to, let's say, your riders or your couriers and others, and also providing a place where they can manage their treasury and banking relationships outside of what you would call maybe a traditional bank or a established banking institution, more closer to where they do business. So it is that broader ecosystem effect that has driven most of the interest and the enthusiasm behind this phrase of embedded finance. And I do agree with you, Gary. It is a bit of a broad term and a broad definition, but I actually think about that in a good way, because it just shows you the multiple avenues of opportunity that exist within that broader sphere of embedded financial services capabilities. Just for both from the market context and also the opportunity context really comes to bear.
Well, one of the themes of this session is obviously the value of partnerships and the opportunities it brings around the as a service working together way in which we do things, and more importantly, getting into the detail of how you embed products and services under each other's brands sometimes in order to promote things. So I think we talked fairly well and in detail about the evolution of it all and how it's coming together. But Alexandra, if I go back to you, let's have a talk about what this really means then, with this ecosystem coming together. If I'm now the recipient of a series of services from another institution who I'm working with strategically and commercially, what are the things that it really helps me with in terms of the range of services and how I might deepen and retain the relationships I have with my current customers, and how do I then use it to drive value to new customers that I'm trying to onboard? How does that start to come out, do you think, Alexandra?
Yeah. So look, I think first of all, non-FIs tap into embedded finance for a number of reasons, right? And I guess what I'm going to mention is not mutually exclusive or collectively exhaustive at all. So I think, they may want to drive stickiness and drive a better customer experience, right? If I'm a non-FI, I may want to do that. It could be a loyalty play for them. It could be going beyond and just serving customers better, right? In some other cases, they want to offset some sort of cost by giving back value to clients. And in many other cases, is a new revenue streams. And to be fair, again, as I said, this could be a mix of things of the motivation of why doing this. I think on the opportunities, I think as mentioned earlier, I think embedded finance is really at the start of the journey. The opportunities around serving clients better and more holistically. You can essentially expand this concept to a variety of industries that are not yet exploited. If you think about the number of non-FIs, platforms, or even industries where finance can help many of their core industry challenges, the opportunity, I think, is enormous for this. Did that answer your question, Gary?
No, it did. I mean, the key is there's no one single solution, but it probably helps with the stickiness of clients. It offers an extension of a range of services, which is obviously both appreciated and valuable, and one hopes it's revenue generating as well. So I think it's very important that we draw those points out. I suppose the other one is the pace by which you are able to be agile in your innovation and delivery of new services as well, which I'm sure is another factor that we see there. Well, I was just going to add to that.
Add to that, Gary, before you move on, if that's okay, in terms of, what Alexandro was saying there about the non-banks, right? And that's quite a broad segment as well. I probably didn't introduce myself. I cover non-bank financial institutions at Clearbank. I head that team. And within that, there's so many distinct segments that are doing such unique things. So if you have a look at, let's say, the wealth segment within the non-bank financial institution, historically, they've sold funds, then relied on banks to do the collections of investor subscriptions and redemptions, right? It's kind of been a very disjointed process. You're selling funds, and on the other side, you're doing the accounts receivables and payables. And what embedded banking has allowed a lot of robo-advisors, the new entrants, to do is just embed that experience, the collections and the redemptions, into the investment side. It's no longer disjointed, and that becomes a real-time experience, which is just massive compared to, me as an investor going into an app, buying funds, then immediately, doing the payment side at the same time, embedded in that experience, versus as an offline process that takes 3 to 5 days. That's very disjointed. So that's just one example within the MBFI segment that Alexandro spoke about there, that is being disrupted. And there's others. There's InsurTech, there's what they're doing in that space as well. There's so many examples. And again, putting it crudely, not all of those examples are financially viable. But I love the broad thinking and the enthusiasm, what Ranjit was talking about, that these players have to think about things differently.
Yeah, and if I can just maybe chime in as well, I think that's a great theme, and that's what we see in our interactions with our merchants and our partners as well. It's gone from a consumer sort of reaching out to someone for services, and it's sort of evolving, or is on that journey of evolution of bringing the services more to the consumer rather than the other way around. So if you're already, let's say, a courier who's delivering food with somebody on a regular basis, or subscribe to a ride-sharing app and drive for them every day, now the points of interaction with those services and those merchants is actually more than probably your interaction with your own bank. So it does make sense to bring those services closer to where the consumers are. And that's where the challenges also start to come out around how do you manage onboarding, how do you manage to scale this, and so on and so forth. But I think that was a great theme that Suki touched on.
So let's come back into some of those things, because one of the other areas we want to talk about is how does this partnership start to evolve and develop, and where does risk and liability and ownership of data customers and other things happen. But I did ask you a poll question a short while back, and thank you very much for responding. The poll question was, where is your organization on its embedded finance journey? And if I just round up the numbers, not yet offering embedded finance, which is a quite high number of 32%, actively searching for the right partnership, 20%, began implementation, 11%, and already offering embedded finance, 39%. I think that's quite an interesting range there. And Suki, you may have a comment on that, but if you offer that, let me also lead you into a question, because I do want to pick up on some of the things here about how these partnerships emerge, and what are some of the challenges around that as well, and some of the risks. And from your point of view, picking up on your earlier points, and my question to you is, how do you find each other? Because not everybody is going to be suitable for each other. So how do you sort of find each other? And then what's this process of embeddedness? Because it clearly isn't something you do just as a short-term fix. It's got to be much deeper as a strategic intent. So two things there on the poll questions, and then some comments from you on that observation, Suki.
Yeah, I think the poll questions is interesting in terms of where people are on their journeys. All I would say is that, and this goes to the really core about where these conversations often start, right? Can be on a conference floor, can be in a forum like this. It's just that curiosity about, how can, again, I think all the speakers touched upon, it's not a new concept, right? It's a bit of a buzzword. Sometimes it's misunderstood. So it's all about scratching the veneer and understanding what it means for each segment, right? Because often I think, we people working in the industry, we use these broad segments, a bit business school-y like language kind of thing. And it's scratching beneath the veneer and finding out what it actually means for each individual segment, and having that ability to really get into the weeds, because that's where the value creation comes in, right? That's where the commercials kick in. That's where the business cases write themselves. And so when you're presenting it to your board, they kind of get approved quickly because the economics are so compelling. So I think, and I think initially, again, I've been in the industry some years, I think there was a paranoia that FinTechs were going to eat the bank's lunches, right? And therefore, there wasn't this really concept of co-creation. It was all about doing this, right? This is my little secret. I don't want to share it with the banks. And then I think now there's an accepted, and the banks were worried, right? They were thinking, oh no, these FinTechs are going to eat our lunch, right? But now I think there's that more concept of co-create in terms of disarming ourselves, saying what we can do, what we can bring to the table for the underlying consumers, and then everybody having that co-creation hat on about where we can add value in the value in each stage of the value chain. So I think that your mindset has to be built around that, and even some of the legacy banks have clearly woken up to that, and they have their own innovation labs and they're trying to commercialize. But even then, there was a lot of suspicion within the fintech communities that they're just going to take our ideas, commercialize them, and kind of get our ideas on the cheap kind of thing. So I think the reason why I'm still in this space and why I love this space is that co-creation that even Ranjit spoke about, the enthusiasm that certain people have for their business cases. And often, dare I say, we as banks, we bring a slight reality check to the business cases in terms of if they are viable. Because ultimately, Gary, the final point I think you wanted me to cover on this in this section was the regulators, right? How do they regulate this area? And the reality is what we're seeing within a clear bank context, we obviously as a regulated bank work very, very closely with the regulator, is they want to ensure there's one throat to choke. And it's a horrible expression, but they want to know if things go wrong, who's the party where they can go to. And that's why we as a regulated bank will not do embedded banking with everybody on the street. It's just not possible. We have our own due diligence requirements. We want to ensure our clients are onboarding their customers correctly. It shouldn't be seen as a regulatory light touch. By far, it's not. But we do it in a very automated, innovative way. But ultimately, it's banking services you're consuming. So that one throat to choke should not be underestimated.
And I suppose the continuation of that, Suki, is that if I put it in another way, you are effectively the back office conforming to the regulatory and compliance needs, as well as all the governance around the data flows, the security, the privacy, but at the same time, providing agility so that the front end value to the client is where I'm assuming your clients will heavily focus on.
They will. And, the reason why they come to a ClearBank is because we don't have that legacy infrastructure, right? We're not going from batch processing and dragging ourselves into the cloud. We've started off in the cloud, API first, so we can offer those real-time experiences that customers demand. That's why it's important, that partnership approach with a cloud-native API-first bank.
Yeah, and if we go to the second poll question, which I'll put up for you now, Alessandro mentioned some of the areas about pay-ins and other services, and this poll question really is around that. From an embedded payments perspective, what is your organization more likely to embed within your customer journey? Is it the pay-ins, is it the payouts, or is it offering a range of services around the cars, the insurance, and the other products that you can offer in some way? Alessandro, just given Suki's comments there, what's your thoughts on how the way that these relationships are actually developing, and how services and risks and responsibilities and also opportunities are emerging? You're seeing the same pattern, are you?
So let me probably pick it up from a different angle, which is the angle from the embedded, right? So essentially, if I'm a non-FI and I actually want to launch any financial offering, right? So I think there are a couple of things I need to consider. So distributing financial services has historically had very high barriers to entry, and now enablers are lowering this barrier and changing the value chain, which is really, really good. But actually, how do you launch the ideal financial offering, right? And I think there's a philosophy that we actually, whenever we talk to partners, we do mention a lot, which is, look, whatever you launch, make it highly relevant. Think about a superior outcome. Have a competitive cost, but then really prime a smooth experience. I think that's a key thing. So if I had to summarize the key factors to win, it's definitely around build the trust, bring insights, drive convenience and speed. Those are the factors to win, right? So I think that those are everything around the customer centricity, the customer journey, loyalty and data. That need to be at the center of what these non-financial institutions or platforms are actually need to prime. I think then it comes the question around, to your question, Gary, it's around how do we choose the right partner, right? So there are hundreds of enablers out there, and I think embedded finance thrives on the concept that you can or shouldn't do this all by yourself. To be successful, you need to outsource that burden of setting up the program infrastructure and really priming speed to market. So a few considerations that we talk to partners with is, look, ensure your strategic goals are aligned with the ones of your partner, right? That you are a priority segment for them. Otherwise, you risk being underserved, right? So ensure the area or the segment you want to grow into is the partner's key objective as well, and it's aligned to their growth strategy. I think it's important to choose a partner with a flexible, modular, and an easy to plug and play technology, right? That's going to be key because that's going to make integration seamless, right? And then if you want to change things down the line, having that possibility is going to be super important. And then finally, I think we touched on a very good point, which is around compliance. I think in assessing the partner in a diligent and systematic way so they can actually monitor and comply with their regulatory obligations. I think this area tends to be overlooked, but it's so important, right? So, and I think it's asking the question around what are the checks? What's the system monitoring to ensure like all the clients that are being onboarded and are actually complying from a regulatory perspective?
No, that's a very good summary. Thank you for that. And we'll pick up on some of those points as we go into the sort of final quarter of the webinar. Let me just go back because we've got a lot of responses straight away to the second poll question, which I'll remind you is from an embedded payments perspective, what is your organization more likely to embed within your customer journey? Pay-ins 13%, payouts 30%, and a whole range of services, which really I think represents the conversation we're having here around embeddedness is 57%. So that's quite interesting. Ranjit, you may have a view on that, but what I'd like also to ask you to sort of bring it back to, Clearbank came into this business with a very focused view on embeddedness. Maybe you were one of those startups eating the bank's lunch at some point, but now competing alongside them. What's your view on bringing together the partnerships and some maybe examples of how that's helped the people that you're working with to compete and innovate in their particular fields? Ranjit.
Yeah, happy to touch on it. So we've firstly, I am not surprised to see the outcome of the poll question that you put in. Just given where we are seeing most of the demand come in from our own services perspective, it does angle towards the point that we all were making previously around value creation and value generation, in addition to your existing core business or any ecosystem around that. So it's certainly encouraging and both not surprising to see an overwhelming set of results in favor of financial services. In terms of the partnership aspect that we've encountered, so from a Stripe standpoint, our core value proposition is being able to abstract away the complexity of doing day-to-day activities in the financial space. So be it pay-ins, accepting payments or multiple payment methods, processing payouts, or even managing money between multiple parties of a three-party ecosystem. And there are components that we can, or large parts of that we can do ourselves. But there are also a healthy amount of solutions that we want to also offer our merchants and users that would require, either due to regulation, convenience, or even just speed to market, a capable partner who we can kind of jointly go to market with. And that's where we tend to see a lot of our challenges come up as well, where we come at it from more of let's optimize the user journey, the onboarding flows, and make it as frictionless as possible. That ethos may not resonate across all of the financial services products that exist, particularly around, I'm speaking around the lines of credit, be it SMB or consumer credit, where the experience that we envision would be to make sure all of the capital or lending offers that go out are instantaneous and are more on a pre-approval basis. But when we go look for partners, it may not be the same way that the partner operates. So there is that sort of deviation or slight misalignment in terms of the experience that we envision and the capabilities that the financial partners are able to bring to the bear. And what's encouraging, of course, is that there's more and more acceptance that convenience and user experience is generally well put at the forefront of all of these products, and that's what drives growth. So we are seeing a large shift among even traditional FIs to sort of be more accommodative to things around integrations, being able to scale, managing reliability and uptime in a much more if I can say so, 21st century manner. So there's certainly a shift in that space, and that has encouraged us to explore joint solutions with, especially in some cases like banking and credit and so on, to make sure we are also ensuring that the core ethos of Stripe around abstracting away complexity and making sure it's accessible and ready to use for our users, but also at the same time partnering with someone who's able to bring that compliance lens to the relationship and is able to kind of jointly work with us on that space.
And just because it crops up, and just because we shouldn't assume that everybody thinks about these things in the same way, what are some of the basket of products and services you're offering? I mean, you're supporting lending. We're talking about pay-ins to your account. We're talking about distribution of funds out. And we're talking about card services, insurance services. The whole thing has the potential to really offer quite a basket of different services and products with a bit more speed and agility. And that may be assumed, but I just want to draw that out because we are talking about what is the value that the client sees at the front end. So is that a fair summary, Ranjit?
Yeah, I think that's fair. Right? No, a good way of looking at it would be under three buckets. You do have the core payments, or what you could potentially call embedded payments components, which is both managing pay-ins and payouts. That's one line of the business that Stripe operates in. The second one is what we call embedded finance, or more traditionally called banking as a service. That's where things like capital or lending come into play, issuing for both prepaid cards and others into that domain, and also treasury services and account management services ought to come into that second pillar. The third, where we provide services, is more on revenue and financial automation. So these are things like managing recurring payments, having capabilities for easier and more seamless financial reporting, and access to data, and so on and so forth. So I think we do a lot of things, but all of what we do tends to center around those three core pillars. Equally, I think there's a different level of maturity as you can look at the market in each one of those, and that's how that tends to reflect in our business as well. So there's definitely growth in all areas, some more so than others.
So Suki, I'll come to you with the same question, really, because it's the practical elements of all of this that people are getting to grips with and trying to understand. Ultimately, as Alessandro said, is the stickiness of the retaining business, but equally drawing in new business as well. So from that practical basket of products and services, what are you sort of seeing and presenting? What are you being asked for?
Yeah, so I think fundamentally it's a bank account. If we were to embed what the feedback we're getting from prospects is, if we were to embed a bank account in this experience, so we do the pay in, pay out through a bank account, does that make our proposition more sticky, right? Can we do a more speed of a more real-time payment? Can we keep the liquidity within our ecosystem and extend the services we're offering to a customer? So instead of just doing a simple payout, can we actually keep the funds in a bank account that they would co-brand, and then keep the liquidity within their system? So when they are doing a payout, that they have the liquidity on the account. So they're the types of kind of dialogue we're having in terms of really pushing the envelope on a traditional bank account. Yes, you can have savings accounts, current accounts, accounts for various pockets. And, there's concept of digital wallets is something we're all a lot more receptive to, right? Not everything goes through a single bank account. We have wallets for things as well. So that's the type of dialogue we're having. But what Ranjit was saying there about different segments are at different points in the evolution, that's true. And I think on the chat, there was a question about InsurTech. And that's, again, a fascinating segment. There's this parametric insurance, when you get the payout when an event happens, i.e. your flight's been cancelled at Terminal 5. Before I've walked out of the terminal, my insurance company has pinged me the cost of the airline ticket because it's cancelled due to some issue. Those types of nuggets of gold within each segment that you know that they're going to have to embed a banking experience into the overall experience of buying an insurance policy. They're the types of dialogue we're involved with.
And I think that's a really interesting way that tends to allow us to use embeddedness, banking or finance, whatever you call it, as a real differentiation of value in today's instant digital world. And I think that's a real fundamental thing. But we are coming towards the final moments of this session. We've got about another 5 minutes to go. We started off by looking at the need for and the value of partnerships and opportunities, and we certainly have covered many of those evolving ways in which embedded finance has grown up and has been adopted and accepted, and perhaps redefined as well in today's modern world, and looked at examples of how it's actually playing out and where risk and liability and ownership goes. But to one of the earlier points raised, that the ownership sits with the organization that has that client, and what is happening here is everything behind the scenes is designed to disrupt how that client offers services different to their competitors, and how they offer services very smartly and in an agile fashion to those clients. So it's a really fascinating topic, and we've covered a lot of the grounds. I suppose if we crystal ball a little bit, Alexandro, we're now in the world of embedded finance with its multiple strategies and approaches. What would you anticipate will happen if we go forward 18 months or so? Just the practicalities of, will the momentum that we've achieved now continue? How might it expand? What's the next thing that you think will happen along the path of embedded finance as we've discussed it today? Alexandra.
Yeah. So, I mean, thanks for that, Gary. I think, as I mentioned earlier, I think we are. Embedded finance is really in the start of the journey, right? So, I think there are many more opportunities to go after from either from a non-FI perspective, from an enabler perspective, integrator, even banks or financial institutions, being behind the scenes. I think. Let me probably tell you my 18-month view, but then also let me tell you a more strategic view around how scenarios can play out. So I think in the midterm, I think the use cases that we are seeing are still very controlled, right? So we are seeing specific use cases, specific industries playing out. I think the market is learning from those use cases. Those use cases are playing quite well, and now I think what we will see is in the next 18 months what I call an expansion, right? And that expansion is going to come through different use cases and different segments areas. So I think it's, for example, we think about pains, for example, right? I think there were a lot of pains in restaurants and the hospitality sector, and now that's actually expanding to other sectors like healthcare, for example. I think what we will see is a breadth of use cases and different segments. I think segments were not necessarily benefiting from embedded finance will start to benefit from that as well, because I think the whole industry is going that way. So that's one thing. Then now, if we actually think about in a few years' time, I think there are a couple of the scenarios that can play out. So banks could actually, may want to be much more present in how embedded finance is being played out, and they actually could intensify their efforts in this. I think that's something that we could see. So they could start becoming much more innovative in that sense, in that area, and start playing to where the enablers or FinTechs are actually playing into. The other scenario is probably banks will likely play a more invisible role, right? Which could be more behind the scenes, could be just more allowing actually the distribution of financial services being played out by other means. I think what we are saying is consumers, businesses are getting increasingly more comfortable interacting with non-bank brands, right? And with the digital brands. And I think as that become more often, so the banks will need to just decide whether they actually play and intensify competition, or simply they just actually work behind the scenes. So that's I think those will be like the some of the key scenarios to be playing out in the next couple of years as we see embedded finance to continue to take off.
Well, I think we've certainly hit probably several forks in the road, to use that analogy, as to which path you choose to go down to. And I think the great thing is it offers that diversity in order to do so. Quick final few seconds from you, Suki, on where you think it's going, and particularly those legacy.
Yeah, sorry to interrupt. I think, embedded finance started off with branded cards. Wasn't particularly revolutionary, right? It was just somebody's brand on a card. Then it's gone into what I think we've seen today and what ClearBank's doing today in terms of allowing non-bank financial institutions to offer banking services, some of the brands I spoke about. I think the third wave, similar to what Alexandra was talking about, is that truly corporates, as in institutions that have nothing to do with the banking service industry, but very, very valuable brands, having the ability to offer banking services. I think that's where it's going to go next. Right. So those three distinct waves.
And obviously, Ranjit, I'll give you the airtime to offer a final thought on the topic as well.
Amazing, thank you. I do really like crystal ball questions because if you're wrong, it'll take at least a few years to realize. So I think that this trend that we're seeing so far on like the emergence or even the proliferation of embedded finance will continue. It will certainly be, at the essence, what it's doing is it's democratizing access to financial services more than it was before. So again, bringing the services back to the consumer is where I think I see that trend very strong and definitely having a strong growth potential in the future. And in future you may have I think we already see some of this where consumers have multiple relationships rather than the old days where there was one person, one bank sort of a model. Now it's you have some money in your some in your neobank for transfers. You may have your pay-ins or your salary can come into your primary account with another institution, investments in another app, a bunch of money probably on, I don't know, your Starbucks app as well for coffee. So you're already seeing that sort of disintermediation of how consumers engage with financial services, which was previously in one place, spreading out. I think that trend will further continue, and it'll start to even become more normalized to have multiple banking relationships and multiple financial services relationships from a consumer standpoint, and more so for merchants to be able to offer more than just their core value proposition. E-commerce stores could be offering balances and savings accounts. There could be ride-hailing apps who are also doing the same in terms of issuing cards and stuff. So yeah.
Potential is considerable, and I suppose maybe I end with, it's just a reflection of our own consumer needs now on what we're comfortable with and what we want to be offered to us as options for the value that we seek from the providers that are out there offering their services. So look, that does bring us all to a close. I'd like to thank everybody for your attendance. Thank you for your contribution to the poll questions. Thank you for your comments. We've tried to touch on as many of them as we possibly can. Alexandro, Ranjit, and Suki, thank you very much for the time you spent prepping for this and for the great conversation that we've got into across the various experiences and markets and companies that you serve. So thank you again for your contribution. I'll leave you now to enjoy the rest of your day as I close off the webinar. Thank you very much for joining.
Thanks, Gary.
Thank you, everyone. Thank you, Gary. Bye.